Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. Today, we're going to talk about your car payment and how it may affect your TDS and GDS. One of the biggest things we run into, especially in Alberta, is that people have some very large vehicle payments. Over the years, I've seen close to that $2,000 mark for a one-ton diesel that did nothing but pull a holiday trailer on occasion, right? So my guest today is Kevin Kennedy, and he is the owner of KDK Financial Corporation. Welcome, Kevin.
Thank you. Thanks for having me.
So maybe just give us a little background of how you got into this part of the industry.
Sure. Yeah. So been in, in the auto business all my life. So when I was 14 years old, I grew up with my dad's used car dealership in Ontario and kind of just never got out of it. I went to school. I studied automotive marketing, business admin, and then just worked my way up from the bottom all the way up to running one of Canada's largest auto finance departments. And I just saw a niche for it. There was probably, I'm going to say, anywhere from 5 to 6 files that would come into the dealership where mortgage brokers sent their clients in to restructure their auto loan. And it was a mess. It really was. Like at the end of the day, it took forever. And, they had to get through the gauntlet of the sales department. They were trying to sell them a car. And at the end of the day, all that the client really needed was just to, remove a cosigner or reduce their payments. Just they wanted to keep their vehicle and restructure it. So after seeing, I was there at Toyota for probably 4 or 5 years, and I saw this happen every month pretty consistently. And I decided, you know what, I'm going to reach out to a couple mortgage broker friends of mine and just kind of see if this is something that comes up often, and it is. And then I was thinking, okay, so if this is a common problem and there's X amount of mortgage brokers in Canada, there's got to be a business here. So I decided to open up KDK Financial. And essentially what we are is we're a company that allows mortgage brokers to do their own auto loans. So the mortgage broker is in control of the entire transaction from start to finish. It's organized. Nobody's trying to sell anybody a car. And the client experience is awesome. So it's good experience. The client gets what they're looking for quickly. And the mortgage broker has no issues, and they get what they need quickly as well.
A variety of different ways that your programs work. Maybe talk about cosigner is one that I know we run across quite often, that the cosigner wants off. Usually mom and dad or Uncle Bob. And so how does that system and how does that part of the business work?
Yeah, so we do a ton of different types of files. Cosigner removal is a popular one for sure. And all we do is we just get a competitor lender to pick it up. So banks don't do, at least in the auto lending world, they don't do refinancing. So they won't redo their own paperwork. So the only way to remove a cosigner is to get a competitor bank to pick up the paperwork. So we're kind of like a mortgage broker in the sense where we have access to all the lenders. So we've got 21 lenders. So every major lender. So we got RBC, TD, CIBC, National Bank, you name it. And all we do is we just get the client qualified with a different bank and then use that loan to pay off the cosign loan and you're off to the races. So it's actually incredibly easy to qualify for. In auto lending, pretty much everything is system adjudicated. So an analyst doesn't even look at it. All the computer system would go in and see is, okay, so listen, this person's got 8 months or a year or whatever it is of good auto history, and its system approves, and then you're good to go. So it's actually it's quite addicting. To be honest with you, it's fun. I love what I do, and we make a lot of mortgages go through that definitely wouldn't have gone through unless we got involved. So it's it's a rush. So cosigner removal is a big one, but the majority of the files that we do are payment reductions, and that's just simply when your clients, the TDSR is out. What we'll do is we'll just reduce that car payment and get your numbers in line, and then you're off to the races.
So sometimes it's that. So actually, when you refinance, how easy is it to get extra cash for the client?
Pretty easy. So the loan to value parameters in auto lending is typically around 140 to 150% loan to value. So if they've got the vehicle, unless they had a whole bunch of negative equity when they bought it originally, we'll be able to add in some cash. So quite often, by the time you add in some cash and then re-amortize the loan, you can actually, get quite a bit of equity out of the vehicle and still have their payments go down. So that's kind of a perfect storm. Anytime you're dealing with a mortgage broker and you have a way to access cash and your total debt servicing goes down at the same time, it's kind of a perfect storm. So it's also one of the more popular things. I would say between the payment reduction and the cash added to the loan, that's probably, I'm going to say 70% of our business. And then the rest kind of just goes down from there. But that's two of the biggest things that we do for sure.
Yeah. We see it a lot of times too, where somebody has, I had one client in particular that his purchases were always F-350 size or bigger. What had happened to him is that he had gotten to a point where the dealership had kept rolling his other vehicles into the loan. And he was at a point where he owed way more than the vehicles. Is there really anything you can do for them at that point, or?
It's tougher for sure. Like, I mean, at the end of the day, eventually there's going to be a stop point for the lender where there's going to have to be some cash injection. So if you trade in every, couple years and you're constantly rolling in negative equity and not putting cash down, doing longest terms, there's going to be a point where the bank just says no, right? Max to finance, you're going to need to put down some cash or whatever. But most of the time we're okay. Like, we really don't run into situations like that, because at the end of the day, we're refinancing their current vehicle. Where you get into troubles when you're trading in and the dealership pays you next to nothing for your vehicle and you're rolling it in. But most of the time when we're doing a refinance, even if they are kind of on the upper end as far as negative equity, we typically get it done. There might be a situation where, there's a cash call. We need like $5,000 down or something like that if they're really upside down. But most of the time it's clear sailing.
That $5,000 would not have helped that client.
Some are really bad. Yeah, it's really bad.
So obviously working with brokers right across Canada, pretty much, except for Quebec, I'm assuming.
We stopped at Quebec, yeah.
Stopped at Quebec, so do we. We skipped over to Nova Scotia, actually. We're licensed there as well. That was interesting to see that. So a big group in the West for you? What kind of penetration have you had into the broker market?
So like we're pretty much, I'm going to say we probably have 70-80% of all mortgage brokers. I'm going to say it's pretty close to that number. And our largest groups are like, I decided when I built the company, what I would do is I just reach out to corporate first. So I'd reach out to like TMG, like to the management team over there, and kind of just filter down. So that's basically all I did. Is when I first started the company, I looked up the highest volume mortgage brokers and I called them first. I just went down the list, and then the rest is just really word of mouth, because it is such a good service, right? So the nice thing is that makes us different than anything else or anybody else is that it essentially is like the mortgage broker is doing their own auto loan. It's that streamlined, even to the point on our website, you can actually, when you submit the leads, you can see your status constantly updated in real time. So you'll see if a file's approved or funded or whatever. So the only real difference between, doing a mortgage and doing an auto loan is just that we're the ones that are processing the paperwork for you. But yeah, no, it's been a bit of a ride. And we're pretty much, we just got back into Ontario. We were in Ontario in 2023. We had to pull out. Now we're back in. But the majority of our brokers are in BC, Alberta, Saskatchewan is probably the majority of our business. Yeah.
Excellent. So how simple is it for the mortgage broker? I know we like simple. Simpler the better, right? But what does it look like for actually submitting to your system?
For sure. So there's two main functions so we have a broker dashboard that's built for mortgage brokers, and it's really two main functions on the site. So the first one is called broker quote. And that's where we prefer that the broker kind of starts the communication with KDK. And what that does, it allows you to get a payment scenario within 2 minutes. So you submit the broker quote, and then you get a reply back, and you'll be able to see where payments fall, et cetera, et cetera. And then what you do with that number is you present it to your mortgage lender just to make sure that the numbers are going to work. And then once you have an outcome that's going to benefit the client, you simply just reach out to your client and be like, hey, listen, here's the solution that we have to the problem that we ran into with your auto loan. And we work with a company called KDK Financial. They're going to reach out to you and kind of start the approval process. And then what you do at that point, once we have the consent to contact your client, you just go into your dashboard and you choose submit lead. And then one of our client care specialists reach out to the client immediately and start working on the approval. Typically, we have an approval within 24 hours. And then once we get the approval, go through it with the client, sign everything over DocuSign. And then once we're funded, which is the next day, we send the mortgage broker everything that they require to get their file done. So copy of the contracts showing that the payment's been reduced, and then loan closure documents showing that the old loan is gone, and then you're good to go. So that's really it. So one thing I have learned about mortgage brokers is make it easy. So that's what we do. You literally just have to submit the lead. We take it from there, and it's extremely quick, and the paperwork's tight. So you get everything that you need very quickly, and it's all perfect.
Right. So you're able to get a payout payment that quickly?
Oh yeah. Yeah. Everything's electronic. So we can pull payouts electronically from all the lenders, and we send you proof of loan closure documents. We just send you a copy of the payout statement, a copy of the bill of sale, and then a copy of the loan closure check showing that the loan is gone. And then the client can get a lien release letter, typically 5 to 7 days after that, if needed.
Yeah, that's interesting because we sold one of our cars personally, and it took Scotiabank like a week. The guy had to wait to register the vehicle. He already had the vehicle, but it was like
Scotiabank's one of the worst, to be honest.
Not that we don't love Scotiabank, just put that.
They're a good bank.
I'll put a caveat in there for us.
They're slow on some paperwork sometimes.
Yeah, they're slow on paperwork sometimes.
All good. Yeah.
So talk about some of the success stories, maybe. I see a few on your site. Ones that jump to the front of your mind.
Yeah. So obviously, there's so many. Like there really is. But one of the ones that really sit well is sometimes we deal with clients that are in a tough spot, like a lot of Canadians are right now, right? So, I mean, probably my most memorable file was a couple years ago. Nice lady. She had 3 car loans, her and her husband, and the payments were close to $1,800 a month between all 3. And she was struggling. It's when mortgage rates are really high. Her mortgage came up for renewal, and payments were causing an issue. She was honestly fearing that she would have to foreclose on her mortgage. And what we ended up doing, she was in a good equity spot in the sense that the car loans were 4 or 5 years old. So we ended up re-amortizing 2 of them and adding cash to one of them to pay out the third. And her overall monthly payment obligation went from $1,800 down to, I think it was around $650. And that extra, $1,200 or $1,150 or whatever it is, made the difference for her, right? And at the end of the day, things went really well. She ended up keeping the house. She didn't foreclose. So there's lots of feel-good stories there. But I mean, we're constantly helping people obtain home ownership, which is something that I didn't think I would love this much. In the car business, it was fun. You get people approved, great. They got a brand new car, they're all happy. But now what we're doing is we're helping people obtain home ownership, or saving people from difficult spots, which is probably the most rewarding thing I've ever done. And it's awesome. I really enjoy it.
Yeah, that is one of the things about has probably kept me in the mortgage industry is that end result for especially first time buyers or somebody who has worked hard but just didn't make very good financial decisions. Sometimes that you're able to get that transferred over and less payment and get home ownership out of it. That's a great way to go. One of the things I have run across quite a few times is transferring the vehicles to company name. How difficult is that to do?
It's actually quite easy. We probably do, I'm going to say 15 to 20 of those a month. It's starting to pick up as far as one of our most commonly requested services. So the lender that we use for that is RBC. And the reason that we use RBC is because they will approve the commercial loan based off the client's personal credit. So RBC has the corp on as the primary, your client's on in the second position. But the nice thing about RBC is they don't report to the personal bureau. So they consider it a true corporate loan. So they report to the commercial bureau, but not the personal bureau. So what we provide the mortgage broker is obviously proof of loan closure doc. So proof that the old loan is gone. And then they're running the file through their corp. And then you're off as far as debt servicing is concerned. So we don't need any company financials. Really, the RBC doesn't really care too much at all about the company. I've had clients that just opened up a company a month ago and got approved because their personal credit's good. So RBC doesn't report to the personal bureau, but they will go after the client if they default right down the road. Right. So their sole reason for approving based off their personal credit. So as long as the client's got good credit, we can redo the loan and take it off the bureau through commercial lending. Yeah.
Right, because most of them want a personal guarantee, and that ends up on the credit bureau, right?
They do. To my knowledge, the only bank that does it in the manner that works for mortgage brokers is RBC, and it's sad too because like these clients are being told at the dealership that it won't show up on their credit bureau, and then surprise, surprise, when it's time to do things like a mortgage, there it is. So it's one of those things that. It's unfortunate that the business is like that, but sometimes a dealership will tell the client whatever they want to hear to get them to sign and then take a truck or a car or whatever. But yeah, we come in and we clean that up and get it done appropriately. So yeah.
So do you have to make as many credit pulls as the dealership to
No, not at all. And that's another thing about that is it's just stupid. Like they'll get an applicant and they'll do what's called a shotgun. So they'll send it to 10 lenders all at once and basically just chasing the highest pay from the highest bank. The thing with auto lending is you don't know how much they're going to pay the dealership till it's approved because it's based off credit and you get different amounts. So what a lazy finance manager will do is they'll just send it to all lenders and pick which one is best. With us, I'd say the average would be 1.5 inquiries. Like we're pretty good at sending it to the appropriate bank to get it done. Yeah.
Right. So you actually know where it may fit, just like we do with a mortgage, right? We try to make sure that we understand that the ins and outs of each lender. There's a lot of them, but yeah, that's the biggest one. That's the one that drives me crazy because I don't, you're shopping for vehicles and you see like 10, 12 pulls from different banks, and they're hard pulls because they show up on the credit bureau, right? So
yeah,
makes a big
worst
difference.
Part is they, if they didn't get approved at one dealership, they'll go to the other one. They'll do it too. Like I've where there's like 30 inquiries in a month. Yeah,
it's just like this on the bureau, right?
So. Yeah, maxes out at 99, and I've seen it a few times.
Was that right? Yeah. Oh my god.
Pretty bad, but no, we definitely we understand credit and we want to make sure that the client's profile is not damaged when dealing with us. Yeah,
that's an ethical way to do it.
Yes.
There you go. Yeah. So how many files do you think you see on average from some of the top brokers?
Oh gosh, I had one lady last week when I sent so we pay commission on every file. And I sent her a commission. It was $2,500. She did 5 files in a week. I mean, there's some that use us a lot, and there's some that use us just when it's a necessity. So at the end of the day, it just comes down to how proactive you want to be. And all I can do is tell you what I see from other brokerages, and there's some that do incredibly high volume, and they're nowhere near as big of a group as some of the others that should be doing that high volume. What they're doing is working. And the feedback that I get is they're just presenting it on every file. The ones that do quite a bit of business with us, and it's working for them. A lot of times, if a client doesn't like what they hear from a mortgage broker, they'll call another one. So if you've got a client that wants to be pre-approved for a home, and you say, "Hey, listen, you're approved for $350,000," and that's it, you're done. And they're looking, they're shopping, they're not finding a house that they want to have under that cap, and they end up calling another mortgage broker and trying to get a different answer. Well, nice thing about us, if you utilize the broker quote function, you can be prepared to kind of give the client another option. So you can say, okay, listen, you're approved for $350,000, but if you do an auto loan adjustment, you can be approved for $450,000 or whatever it is. And the feedback that I'm getting from the brokers that do high volume is it works. So at the day, clients will always want to have that little bit of extra spending power on buying a home. And if you can come up with a creative way to do it for them, you're going to win the file.
Oh, so, no question. And auto debt servicing, as you understand it as well, that's the part that you can scrape another couple $100 a month out of that, out of the liabilities, right? It's definitely going to make a big difference on the other side. At 50,000 or so quite easily with that number, right? These days. So.
Yeah, no, it makes a big difference, and it's something that clients want to be aware of. They want to have options, right? And the nice thing is that they're not committed to keeping the loan reamortized that long. So after the mortgage is done, there's nothing to stop them from raising their payments. And there's lots of clients, especially self-employed clients, that their numbers on paper don't look that great, or if waitresses or tip-heavy businesses and stuff like that, where they make more money than what the mortgage lender will give them qualification for. So that's a nice thing for them to be able to balance it out.
kind of touched on it. So what kind of remuneration? How do you pay the brokers?
So every file, if it's under $30,000, we pay you $250. And if it's over 30,000, you get a $500 commission. So we were kind of deciding if we should do a commission model or not, but I figured I really want the company to be essentially an underwriter for the mortgage business. So you guys get paid when you send a mortgage in, and I want to mimic that and pay you when you do a auto loan. And so we pay a pretty hefty commission on every file. And part of it is too to drive other business too. Like we want as much business as possible. So there's situations where you may not need to do a refinance to get your mortgage done. But if we have a commission piece to the puzzle, it might motivate you to say, hey, listen, even on the exit with the client, you're co-signed on a car loan with your daughter. We didn't need to do it to get the mortgage, but here's a company that could benefit you and your daughter and give her some financial independence. And we chase the files like that as well. And we also do a lot of acquisitions too. We were talking earlier about, you mentioned Colin Bruce and stuff like that, how he has us on his website. And there's just simply clients that just want to buy a car and they don't want to deal with a car dealership finance department because it can be a very shitty experience. So the nice thing about us is that we can just set up the loan for them. They come in, they pay cash, and you're at the door. So that's another piece of our business. We don't do a ton of it. Like we are primarily focused on the mortgage broker relationship, doing the refinancing and stuff like that. But yeah, absolutely. If you've got a client that wants to buy a car and doesn't want to go through the BS, then we can help it with that too.
Yeah, exactly right. So it's always stressful, I think, for people, especially first-time home buy or car buyers or something like that, right? That they don't understand. There was a company called Western Auto Credit, and I think they're probably still around somewhere. But when I lived in Fort McMurray for half a dozen years when we started the company, actually, and I was cringed when I heard WAC was coming to town because that some poor young guy was going to go pay 18% for a truck payment, right? And he was making big bucks, but it's it kind of makes you go like, don't talk to them. No, but anyways, but that's there, right? That's part of the industry. It's not unlike ours, where there's a lot of people that just do private lending, and it's way higher than our standard lending. But sometimes that's all that the client can get anyway, right? So
yep. Sometimes it just comes down to credit rebuilding and stuff with the higher interest rates and stuff like that. It's not necessarily the dealership that's being predatory, because they don't make as much money on a high interest rate loan as they do on a prime loan. So their goal is always going to be to get them done through a prime lender. But there's situations where, credit just doesn't justify it and they have to do one of those high interest rate loans.
Yeah.
And we do a lot of that too. Like there's quite often, we'll see a client that's in a 18% loan and they've had good auto history for a year or whatever, and we'll get that cut in half. Yeah. So there's always going to be an option if they've paid well to get out of those high interest rate loans. And we're here to help. The biggest thing with dealerships with clients is that they're very high pressure in the finance department, selling products and stuff like that. And I've seen a lot of files where a client got taken advantage of pretty hard. So the nice thing about us is that we don't do any of that. We just simply provide the client a loan and they can just pay cash, so they're protected. But yeah, I've seen some pretty sad stories. So we're here to help on that stuff too. Yeah.
Obviously, working with brokers, how do they co-brand with you?
So a lot of brokers will open up their own auto lending division within their brokerage. So you've got like TMG Auto Finance or however they want to market it. And we kind of just leave the marketing up to the broker on how they want to do it. If you go on Instagram and I think it's hashtag KDK Financial, you'll see a couple examples of different mortgage brokers and how they market it. But yeah, like I said in the beginning of this podcast, we really are just the underwriter for you guys. You now have the ability to do your own auto lending, so market it however you want. The only requirement that we have on any type of advertisement is that you just have to mention or put our logo that says, powered by KDK Financial. So market it how you see fit, and then just have that in there, and we're fully good to go.
Yeah. Yeah, we have, I don't know how many newsletters that go out I know what I have for my own is almost 500 or 600. But I'm sure over the whole team, there's probably got to be 1,500 newsletters go out every month, right? So easily, if not more. So good way to we'll talk about that after the call, about how we can make that just a link to put into the newsletters, and that work for us as well. So yeah, it's something that is needed. Like I said, we worked with others in the past. They seem to have wandered away and never came back. But it sounds like you're having some great success right across Western Canada or across Canada. And it's definitely something that's needed, especially seeing how the average used car loan was sitting around 9% there for quite a while. I hear it's come down a little bit, but not a huge chunk. But where do you see that rate at these days for used vehicles?
Yeah, so it was bad for a while. Like 5 years ago, used car rates were 4.9. And then they went to 5.9, 6.9, 7.9, 8.9, 9.9, 10.9. They actually got as high as 10.9, which was getting scary. It's starting to come down. Last couple of years, it's been kind of 8.9, 9.9. Now most lenders are at 7.9. So it's still high, but it's certainly trending down. So yeah. I think by the end of the year, most rates will have a 6 in front of it. I'm hoping that trend continues, but who knows? But the nice thing is, if they have bought a car and it's a used car in the last 2 to 3 years, we will have a lower rate. So there's going to be benefit there on pretty much every file.
Yeah. Yeah. I had, in the midst of that, I had to trade mine and didn't want to buy a new one at the time because I wasn't sure what I was doing. And so, yeah, I ended up with a 8.99. But then the leasing side got so low that Honda gave me a 2.99 on a brand new one. So I'm going like, okay.
You'll still get what's called subvented lending, like the 2.9s and stuff like that, but you have to buy brand new. Yeah. That's kind of the only caveat. But yeah, the rates on new are pretty good always. Typically they're under 4%. So it's just when you deal with a used car, it catches you. And you know what? It's tough, right? Like at the end of the day, you get the depreciation when you buy used, so you save some money, but you have the higher rate. So it's a jungle. It really comes down to your car ownership and how you plan to keep it. If you're going to buy a car and keep it for 5 or 6 years, I would say go new. If you're going to trade out every 2 or 3 years, I still believe used is the way to go, even the slightly higher rate.
Yeah, in that 2 to 3 year mark makes a big difference, right? So you can buy that, save that 30% almost, right off the start of what they were when they were sitting on the lot, right? So
100%. Yep.
For many years, I used to buy just used. That was just the 30% difference. I don't know how many Regals I drove that you could buy them off the rental market as well, right? So
sure. Yeah.
Well, thanks for your time today, Kevin. It's a definite interesting part of the market that, and like I said, with a lot of people with 9% payments, it's something that they should be looking at it if they haven't miled out the car, of course, and there's some years left in it. It's definite can be a big assist to them to knock down that couple $100 makes a big difference in TDS and in the mortgage side as well. So,
absolutely.
Okay, thanks for your time.
No worries. Okay, take care.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.